Hey everyone, the motivational professor, and good to be back in the United States after a wonderful 12-day trip to Europe, visiting Italy, France, and Spain. So, anyways, we are back. Even though I was gone, that did not mean that I was not trading because I was, but now I can give you feedback and analysis. And on this video, we're going to focus in on crude oil. So, one thing I want to do real quick is I want to kind of bring in the 50-day moving average. We are sitting on the 1 hour chart. And again, if you heard me talk about, weeks past going before I left on vacation, we talked about how $70 a barrel seems to be about where the average is going to be. I think for the rest of the year, even though we do have some speculation that oil could creep up towards the 90s again. So again, I'm going to trade what I see, but we have to keep in mind that there's going to be a lot of political pressure to keep the cost of gas down as well. So looking at the 50-day moving average, a couple of things that stands out again, how vital these areas are near the 50-day moving average. You've heard me talk about it. I'll link another video on how to make $100 a day trading crude oil using this technique at the end of this video. So you can see that when price breaks above the 50, if you can find retracements back down towards the 50, then you are going to be have an opportunity to be successful in grabbing the points that you need to grab each day, 20, 30, or what have you. So I want to go ahead and jump over to the 4 hour, and then let's begin to look at the technical analysis of the 4 hour. So as you can see right here, even on the 4 hour, we are broken down and we are broke above the 50-day moving average. So now that we have done that, let's go ahead and create some quick zones for you so you can kind of take a look at support and resistance. I'll use the horizontal line right here. As a matter of fact, we are going to be sitting at an area of support and resistance. We've got another one there. And we'll just mark up one more to the bottom side. And then let's mark up one to the top side. Let's see. Yes, that would be one there. And then we're going to fix these up and clean them up in just a minute if we have to. And then we've got one there as well. So let's make this a little bit wider. Let's head back over to our candles so we can kind of see what's been happening. Now, again, we are sitting on the 4 hour time frame. So right now, just based on, candlesticks and what have you, obviously we made a push up from the $67 mark, and we closed on Friday at about 70.37. So the first thing I want to kind of take a look at is this right here. I want to put a Fibonacci ratio right here. I want to go down to this swing low, and I want to kind of see that we've seen this rejection between the 61.8 and the 78.6. And if you're patient, I'm going to give you some entries here, at the end of this video. So again, this is normal, what we expect to see with regards to some rejection coming off those levels, in addition to the support and resistance levels. If we go back down to the 1 hour time frame and we begin to look at this, okay, we can begin to look at these zones, and sometimes it looks a little crowded, but when we drop down to the 15-minute time zone, now we can go ahead and kind of take a look at these areas a little bit better, right? So you can kind of see here, again, you can definitely see that once we made this impulsive move on oil, right, that we've been, obviously trending up, right? I don't need to put a trend line here for you to see that we are trending up in that particular case. So what's going to happen with crude oil? Well, of course, Sunday, there might be a gap. I haven't heard of any major news happening, but there's almost always, going to be a gap. And so we are ironically sitting here at the 50-day moving average, and that's also an area of support. So depending on what the candles do, obviously if it forms and creates a gap to the bottom side, right? Let's say price opens up down here, 69.74 is our next level So we would expect for price to come back up and then eventually come up to close the gap. Let me go ahead and change this color, right? To close that gap. Vice versa, if price happens to gap up, and I'll go ahead and make this green, then we're going to see where price will then eventually come down to close the gap. So this area right here is going to be our gap analysis, just because that's where price closed on Friday. Okay, so if there's any distortion in price when price opens on Sunday evening, then obviously that's going to be known as the gap. So what can we expect from here? Well, let's go all the way back up to our daily time frame real quick. And I'm going to go ahead and take this out for a minute just so you can kind of take a look, okay, at where we are on the daily time frame. Now, if you look here, we can see that we are still making lower lows, okay? We are making lower lows. But that being said, it appears that we have a floor on the daily right here. Okay, it appears that we have a floor on the daily. We have not been able to break below 60. We got as far as 66.87. Okay, 66.87. So again, that may be the floor for the rest of the year. We don't know, right? We don't know. What we do know is that if we look at this now on the daily time frame, and I'm going to go ahead and throw a Fibonacci level from this high to this low now on the daily, again, we can see how we entered that 70% rejection zone, and we're back near the 50-day moving average. So again, we are still in a bearish mode when it comes to crude oil. We would need price, in my opinion, to break and close. And I'm going to go ahead and grab a brush. We would need price to close above roughly 75 to truly say that we are now bullish, meaning, we're going to see the 80s again. So we would need to have a close above that $75 range. So what does this mean for you as an intraday trader? Well, let's break it down. Let's jump down to our 5-minute time zone, and let's go ahead and make this nice and big so everybody can see it at home. You can see what we've labeled the gap. So now, let me get rid of this. Now that we are on the 5-minute time frame, let's make some adjustments, right? This is going to be our gap because that's where price closed. But on the higher time frame, that's also a level of support. So I guess we're going to really wait to see these two scenarios, right? The 5-minute, we did creep under the 50-day moving average. But again, I think we have nice, safer zones to trade from. I think if we look at this, big picture and we back up even the 5-minute time zone, you can kind of see 69 to 71 gives us a 200 point that we can really, afford to make a small mistake in getting in, and we can be pretty confident that price is either going to come back down or come back up to those areas just because we have been ranging. So for me, if price does come or gaps down, anywhere back down in the mid 60s down here, I'm going to be looking to buy back up to about this average, which has been about $70 a barrel. If we do not close above this level of 71.08, then I'm definitely looking to bring it back down towards that 50-day moving average. So I think this is going to be crucial in the intraday. And again, going back to the 15-minute, you can kind of see that's where we have been at, right? If we kind of back this up, right, we have kind of been in this pattern here. After we broke this 67.31 and we came back up to the 69, we're kind of in this pattern. We are climbing, okay? But in my opinion, we have not yet broken this trend, because this is the first wave right here, 72.50. If we look to our left, we haven't been there in a while. So we would need to break 72.50 to go bullish on the 15-minute time frame, right? So again, we have to look for these zones. I've marked them up for you. Look for these areas of support and resistance, okay? And again, If price dips down the 50-day moving average, then I'm looking to buy again once price comes down to this level. So that's the way you can kind of incorporate both support and resistance, the 50-day moving average, and again, looking at price action and staying within your range. Okay. I hope you got some value on this video. If you did, smash the like button. If you're brand new, subscribe. And if you have any questions, drop them below in the comments, and I'll get back to you within 24 hours. Thanks for watching.